And so there's permanent savings and deferred savings. A permanent saving is money that you're never going to have to pay back.
Yeah.
Where a deferral savings is money that you're going to, it's almost like an interest rate loan.
Eventually.
It's like a loan from the IRS. So that's the way we like to think of it. Like a 401k is a good example of that.
Yeah.
And so this strategy is a deferral strategy, but we think of it like a loan from the IRS. So instead of paying your taxes now, you're going to wait to pay it. You're going to plop that into investments or your business and then use that to grow down the road.
Hi, folks. Welcome back to the Peep Podcast, where we discuss the latest in REI tech, trends, and inspiration. I'm MJ, your host, and I'm so excited to welcome Melanie Sikma to our show today.
Hello.
Thanks, Melanie, for being here. We're so happy to have you.
Thanks for having me.
Yeah. So we wish we could have had Melanie's father, Byron, as well, but we'll just have to have him, visit with us another time because between them and other family members, they are the founders of a phenomenal tax strategy and planning business known as One Stop Tax Strategists. So they've helped countless investors, entrepreneurs, and folks in the real estate space, along with many others, when it comes to all of the necessary tax work and strategy. So before we dive into what you guys do, I always like to ask Melanie, how did you get here?
Yeah.
Did you always want to do this when you were a little girl, or tell me?
Definitely not. So my dad's been a CPA longer than I've been alive, I always say. And so I just watched him, and I never ever was interested in the tax stuff. Honestly, it's an area in my life that I hate. And so that's where I think it actually is a strength, because I understand where our clients come from. But my dad, he lived the life like he was always involved in our soccer games and our sports. I played water polo. He's always involved in that, never missed a game, was able to ski, was able to live life the way he wanted. And so I saw that really business is business. And so if you can find ways to help people, that was really what drew me in, is the ability to help people. And then also just have flexibility within my role so that I can, have a great life as well. So I do see taxes as a very high stress area in people's lives. And we're able to take that stress away and then also be able to save people a ton of money. And so I found a lot of value in that.
That's great. That's really great. I similarly, my father was a civil engineer by trade, but probably when I was, I think maybe like as young as 5 years old, he decided to get into real estate as an investor. Primary strategy was holding, and developed a pretty extensive portfolio, but it always afforded him the ability to take us, to travel, to be with us, like you said, at different events and things of that nature. So it's amazing the perspective it lends you, which we don't appreciate when we're younger, right? We just take it for granted. Like dad's always around. Right. It's really wonderful to kind of see the impact or foundation it can lay within us, for future when we have our own families. So it's wonderful. And I mean, I guess let's start out here. Like, what are some of the myths that, people have around their taxes? Because it is, you said it, and it's such an understatement. Those two words, it is such a pain point. It's excruciating for a lot of us. So for our listeners, walk us through, what are some of the things that are like, almost like, you think they're true, but they're not, right? Like, deconstruct some of that for us.
Yeah. I'd say one of them is that everything in my life is a deduction. And a lot of business owners say that. And although that may be like true, that everything that you do in your business or everything that you do in your life ties to business, there's also things that the IRS looks at and they have to agree that it's a deduction. And so what we like to say is that, the tax code is kind of like an IRS playbook. And taxes are a game that you can win. And so you just have to know the rules to be able to win the game. And so having, we're the people that understand the rule book. We're the people that understand the playbook. And so we're able to guide you in a way that you may not be able to figure out. And if you did figure out, it'd take a lot more time than you have available.
Yeah.
So we kind of find ourselves as the partner that gets you to be able to win the game. And so that's one thing, is that not everything that you do is a deduction, but there are ways to tweak it so that it works. So it can be a deduction. So like travel, for example, if you're going on a trip with your family,
Mhm.
My family and I, we go to Hawaii every year and we write it off as a partner planning retreat.
Nice.
And so there's
Okay.
ways to do things
Yeah.
that basically would help it hold up in an audit. And so those are some things to
Okay.
look at. Another thing is that any bookkeeper is kind of made the same. Every bookkeeper is made the same. Not every bookkeeper is cut with the same cloth. And some low cost bookkeepers, high cost bookkeepers, you just want to make sure that whoever's doing your books is, as boring as that is, it's super important.
Yeah.
We had somebody that came to us and they had a really low cost bookkeeper,
Mhm.
and they thought they were doing great, but we were able to look in their books and really quickly we found about $90,000 of income that they would have claimed that they should have reclassified differently, and
Okay.
would have added, several thousands of dollars to their tax bill. $90,000 of income
Yeah.
can add up a lot in
That's
taxes.
Ooh, yeah. Yeah, yeah.
And
That's huge. Okay.
yeah. So those are
That's
some
great.
things. There's a
Yeah.
lot of others, but it's more just like what can you do creatively to make your life deductible? And a
Yeah.
lot of people just kind of try to make things up, and just because you say it is doesn't mean it is.
Well, I know that, there's probably some folks listening out there who won't want to hear that. But I think it's Melanie's kind of here, as I think of the work that you guys do as like it's preventative health. It's like going to see the doctor. You need to have someone who can really look at what your current strategy is, how it can be optimized for the overall vitality and efficiency of your business, right?
Yeah.
So you're keeping more wealth in and actually building that business and scaling it the way you want to be. And we don't always like to go to the doctor. We don't always want to hear what the doctor has to say, but it's usually for our benefit. So,
Oh yeah, for
um,
sure.
you know, what are, this is, you were kind of alluding to this, but what are some things that folks should look for when they're either looking for a bookkeeper or, uh, you know, someone to handle their taxes and do tax planning with them? And,
Yeah.
and if you could kind of, I don't know if, this is like a kind of like a discussion worth going down, but does a new investor or, kind of newer entrepreneur have different things to look for versus someone who's a bit more seasoned, who has a more developed portfolio, you know?
Yeah, I mean, every little bit. So what I'll first answer what you look for. A
Mhm.
lot of tax professionals are more reactive than proactive. And I would like to think that we're very proactive. Our team is amazing.
Mhm.
And we've trained them and have systems in place to cause them to be proactive for our clients. And so I would say have somebody that asks you the questions to save you money, not just questions to fill out the forms. A lot of CPAs
Yeah.
come to you come tax season, and the only time that you talk to them is during tax season. And it's questions on data
Yeah.
and what you made and getting your
Mhm.
profit and loss
Mhm.
and things like that to fill out the forms, rather than meeting with you towards the end of the year or throughout the year and asking you
Mhm.
questions that are going to impact your tax bill and minimize that. And so being more proactive in their question asking. So those are one things we look at. Do they have their back? Do they have your back? Are they going to tell you and bring you ideas rather than you having to come to them with ideas? Those are different things to ask for. And a lot of people come to me. I do the initial calls. I'm
Okay.
actually I'm the CEO of the company, co-founder, but I'm not a CPA.
Mhm.
And so we've designed the business to serve someone like me that is not naturally geared towards taxes, which is, I think, a strength of ours. But when I meet with people
Absolutely.
and I see if we can save them money, a lot of the times they say they get a lot more value out of just that initial call than they have with their CPA the entire time that they've had the
Oh
relationship.
my goodness.
And
That must be
so,
wonderful to hear. Yeah.
yeah, so it's just, are they providing value? Do they have their back? Are they alerting you to things that maybe are available to you that you might not know? Um,
Yeah.
and yeah, just kind of being a partner in that area. For a
Yeah.
bookkeeper, I would say it's kind of the same thing. Are they asking you questions, understanding where your business so that they can properly classify things? Are they
Yeah.
sending you
Okay.
a profit and loss each month or a balance sheet so that you have updated financials? Just kind of just coming alongside you as a partner to help you understand your numbers.
Yeah. When you take on new clients, do you ever find that uh maybe through going through the process with One Stop that they're not satisfied with, some of the bookkeeping elements or other pieces of their business, and that kind of comes to light based on some of the insights you guys share with them. So they have to pivot and make some changes.
Yeah,
Uh,
yeah, we just were doing some tax planning with one guy actually, and
right.
we were prepping for his tax plan, his initial tax plan,
Uh,
and we part of that we do a free books review just because we want to make sure we have accurate numbers. If you don't have
sure.
accurate numbers, you can't have accurate
Yeah.
planning. And so his books were a hot mess, and been paying a bookkeeper for a couple of years, and he didn't realize how bad of a job she was doing or he was doing. I don't know if it was a he or she, but
Yeah.
um and so we were able to alert him to some questions to ask them, and then we'll
Mhm.
probably end up taking them over. But just little
Yeah.
things like that, like he probably hasn't been able to properly plan because his books are inaccurate. And so he's been,
Yeah.
claiming way too much money on his taxes, which also bumps up your tax bill. So little
Hmm.
things like that.
Yeah. Well, and so, for those of our listeners who aren't familiar with everything that you guys do, can you tell us, at a very basic level, the services that you're offering,
Yeah, we do tax
to.
prep, tax
Mhm.
planning, payroll services,
Okay.
bookkeeping, and so we're basically that we do one stop shop to be able to
Mhm.
help you with your full accounting needs.
Yeah, 100%. Well, something that you said, it drew a parallel for me just over in our data world living here at Pete, I think it's really there. It's hard to kind of explain how much impact it makes when you provide, a relatively complicated service, but are able to package it in a way that is simple and kind of inviting to everyone. It doesn't matter
Yeah,
what their starting point is, right? That's what we try to do with our CRM. Not everyone is tech savvy, and so it's important that everyone can access the power of data and the things that they need, the KPIs, in a way that is digestible, right?
definitely.
So I love that about what you guys do, and it's a wide array of services. But especially, speaking with someone recently about this, like in our country, we financial literacy is, it's not as I guess it's not as instilled at as young of an age,
Yeah,
as maybe would be beneficial because this is land of so many businesses, right? It's
yeah,
possible to do so much in the United States, and yet, you know, something basic like balancing a checkbook or the importance of credit, things like that, don't find their way into the lives of everyone, unless you're going to business school or studying certain things. So or grow up around people that,
yeah.
right, like our business owners. So do you find that with some of the folks that you bring on, are you sometimes also, is there an education component of like, hey, these are your numbers, and also this is, let's interpret them, let's walk through how to interpret them in a
Yeah,
certain
yeah.
way. Yeah.
I always say we're like the tax translators. And so a
Okay.
lot of the times
Yeah.
taxes are a
I like
whole
that.
different language
Hmm. Yep.
and super confusing for people. And so we try to get a feel for what our client understands, because some clients want you to talk to them like they're a kindergartner and they don't understand anything. And then they even ask that. And then other clients are very sophisticated in their knowledge. They just want a partner to come alongside them so they don't have to do
Hmm.
all the research. And so we get a feel for what they want. And then we just, as a client, you get unlimited calls. And so we always encourage our clients to call us and ask questions, because
Yeah.
we don't want to have the, oh, you did conversation. It's the, hey, I did this. Oh,
Yeah.
you did? You should have done this.
Or
And
the
so, yeah.
I wish we had talked earlier.
Exactly. So, yeah,
Could avoid
we
that.
think
Yeah.
of ourselves as almost not only a partner in the tax side, but we do educate our clients to the extent that
Yeah.
they want to be educated. A lot of
Sure.
people don't want to know, they just want it
Mhm.
done right. And so,
Yeah.
but some people want to know. And so we're happy to come alongside them with that.
Yeah, that's great. That's great. And like, are there what about, so are you guys helping, investors, at least in the REI space, that are pursuing certain strategies, or
Yeah.
is it, like, is it for your services are welcome for, anyone who's flipping, wholesaling, holding, whatever it might be?
Yeah, most of our clients have real estate in some capacity. A lot of them have other businesses as well. And so real estate, whether it's flipping, wholesaling, buy and hold, multifamily, whatever, we can come alongside them with that. It's really important if you have real estate to have a tax professional that understands real estate strategies. Otherwise, you could be really missing out on a lot of opportunity there.
Yes. Yeah.
And so, yeah, we have a lot of clients in all that area, and we're happy to help them with their goals. We always like to think long term. What are your long term goals, and then what are your short term goals? Because tax planning can, what your goals are can affect what we do on the tax plan. So.
Yeah. Well, what about Melanie for folks, let's say they are investors or they're in the real estate space, who have, you know, uh businesses or business transactions and deals happening in more than one state? Is there anything when there are multiple states involved that, those investors should be keeping in mind when it comes to their tax strategy
Oh, yeah.
specifically? Mhm.
It's important if you are investing or working in multiple states, it's important that your tax professional understands the different state laws because
Okay.
there
Yep.
are
Yep.
different state laws. We have a big spreadsheet that breaks down all the different states for our team.
Mhm.
And we work nationwide, but it
Okay.
definitely was a learning curve with that because there's all different states are so, New York, especially, and
Mhm.
California, those two
So
alone
different.
have
Mhm.
their own different, like an S corporation in New York doesn't always make sense. In Tennessee, same thing. There's a very short window where an S corporation makes sense, but most states it would make sense. And so if
Okay.
you worked with somebody that didn't know that, they would tell you to do an S corp, where in New York that doesn't get honored, so it doesn't really benefit you. And then you're doing all these things to keep compliant without
That
any
one hits
benefit.
that one hits a little too close to home because maybe the host of this podcast had an S corp while living in New York many moons ago and realized when doing their taxes it was not beneficial at
No,
all and was
no, it
appalled
wasn't.
at
Yeah.
the headache that it was to manage it, to even have it in the first place. So, duly noted. I wish we'd spoken a while back. So
Yep.
happy that we're chatting now.
Yep.
Yep.
But yeah,
Yeah.
every
So
every state's different. Even
okay.
on the liability side, it's good to know. We don't do the liability stuff. We have a little knowledge there, but we
Okay.
typically refer to attorneys for that stuff. But it is
Yeah.
good to know, have people on your team that understand each state.
Yeah. And would you say there's any, like any commonly overlooked strategies that you'd recommend or to,
Like in general, or for the
Mhm.
states.
I'd say in general. Yeah, I'd say in general. Mhm.
Well,
Yeah.
I could go through. We have our Live More Tax Solutions framework.
Mhm.
It used to be called our 8-step tax solution. So
Okay.
pretty much, it's the 8 things that we find most people can hit at least some of them. And so, if you'd like, I can go through that.
Sure. Yeah. If you think that would be
So
beneficial. Yeah, it sounds like it would. Mhm.
yeah, for sure. So
Yeah.
the L in the Live More framework is lay the foundation. So we already talked about that. It's having a proper set of books. Good bookkeeping is the
Yep.
basis of all tax planning, and so that's the boring one. But
Mhm.
each one, as we grow through the framework, is going to get more and more interesting. So stay tuned
Okay.
for those listeners. The I is looking at your entities, and so
Mhm.
making sure that any entity in there is identify the right entity is what it stands for.
Mhm.
And so whether you need to be an S corporation, typically for any active income, so like wholesale, flipping, if
Mhm.
you're netting 60K or more, then an S corp makes sense. But like we talked about,
Oh,
there's some instances where it doesn't make sense. And
yeah,
so
not always. Okay.
that's typically the right entity, but some entities actually get audited more than others, and some get
Mhm.
audited less. And then others, there's, self-employment tax gets eliminated, where others there is no self-employment tax for certain businesses. So it really does make sense to make sure you have the right entity, and that can save thousands of dollars. Um,
Yeah, that's huge.
so those are things
Yeah.
to look at. The V in the Live More framework is venue your home. And so this is where the Augusta strategy is pretty well known around the internet,
Mhm.
but it's where you can rent your house to your business for 14 days tax free. So we
Okay.
teach our clients to hold corporate board meetings in their home and then rent that space out. Instead of doing the home office deduction, this will save them quite a
Oh.
bit more money.
Oh,
And
so it's in
so,
place of that or in lieu of
yeah.
that. Okay.
Yep. Yep.
Good to know.
If they qualify for both, then
Mm.
I've ran a case by case analysis on multiple situations, and
Mhm.
almost every time the Augusta strategy wins. And so that's one
And
thing to look at.
And in order to make that happen, you have to actually have, is it for 14 days? You have to have some sort of physical, business meetings or
It could
and
be
whatnot taking
it could
place.
be a
Okay.
schizophrenic conversation though. You meeting with yourself if you're one of the officers. So as long as you document it properly.
Phenomenal. I have so many more questions, but we don't have enough time today for those. So carry
Yeah,
on.
yeah.
What's the E stand for?
The E stands for employ your kids. And so this is for the
Okay.
under 18 kiddos. For example, I
Okay.
have an 8 and a 10-year-old. They're my models for my business. And I hire them to be models. So it builds trust and rapport with prospective clients and clients. And I use them to talk about different tax strategies. I just share about our life as, me as a business owner. And so I post them on my social media, and you can pay them up to the standard deduction tax free. So for 2025, that's $15,000 tax free.
Wow. Okay. Get out. I love this. I'm learning a ton. Carry
Yeah.
on.
And then from there, they can either pay you back for their living expenses, or you can pay for their living expenses out of their accounts, or teach them budgeting. The other option is if you put it into a Roth or properly structured whole life policy, then that's a way to get tax-free growth on that tax savings. And
Okay.
so all that stuff is really impactful in the long run.
Yeah. I mean, we're just at 4 steps right now, 4 letters. This is great.
Yeah, it's
Nice.
a lot of fun.
Yeah.
Now the L is to look at all the other tax brackets around you, and so um, we like to look at. I'm sorry, we're not in the L yet. We're in
Oh, yeah.
the M. So
Yeah, we're
LIE,
already at the M. Yeah.
and the
Mhm.
M
You're
is the
good.
more. And so this is move income strategically. We
Okay.
just rebranded this from the 8 steps, so
Yeah.
I'm trying to remember
Yeah, no
what each
worries.
letter is.
You're good. You're
So
good.
M is move income strategically. And so this is where you look at like the lower tax brackets around you. So we look at maybe your
Mm,
college students. Maybe we look at your
okay.
parents that have maybe they're on Social Security and you're supporting them anyways, or they live at home. Or if you have an 18-year-old that's not going to school and they just start a lower tax bracket, this is a great option. And so
Yeah.
we've had some
Okay.
people, I'll give you an example of what we've done. We have a
Sure.
client that had a student going to school in Arizona State. They
Okay.
were a California resident. And so they were going to have to pay out of state tuition.
Mhm.
And so we
Mhm.
set up the corporation in Arizona with their kid as the passive, actually a small active owner. And
Okay.
there's some rules around college students that you have to follow. And so sometimes we make them a passive owner, sometimes we make them an active owner.
Okay.
But with this person, we hired their kids' company, and he was able to shift $80,000 of his income to the student's lower tax bracket. But also, they were able to get in-state tuition,
Stop it. That
and
is phenomenal.
so they were able to get in-state
Wow.
tuition anytime that they visited their kid. It was a business deduction because they were
Yep.
visiting a vendor. Anytime the kid came home to visit for Christmas or any other holiday, it was visiting a vendor. And so we were able to get those deductions. And then, I mean, just shifting it from the income to the lower tax bracket alone saved the client about $30,000.
I
So
mean, and yeah, being able to get in-state tuition, that is, yeah, it's mind-blowing. Okay.
yeah, that
It
part
is
was
getting more
huge.
and more interesting. You're
Yeah,
right. As we progress, we have 3 more letters and I'm excited.
that's right. And then
Yeah.
also like with the M, my dad, he basically is a prime example of this. So he supports
Mhm.
my grandma. He
Yep.
helps pay for some of her
Okay.
expenses. And so he just set up a company. She's the example of the passive shareholder. And so he made a company. He's an
Mhm.
officer in the company, but not an owner. And she's just a
Okay.
passive shareholder. And so it's like owning stock at Apple.
Yeah.
So this is just an example of that. So he does
Okay.
all the work. That company still does work for another company of his. And so he hires that company
Mhm.
for
Mhm.
services, and he's able to shift money to that income bracket. She basically pays the tax, and then he lets her keep half of the savings and then gift backs the rest. And so he's
Okay.
able to make a profit on helping my grandma out.
Yeah, I think I remember him mentioning this at one of the masterminds. That's a really, I think it's a really amazing strategy. And what I love is that you're covering, for folks who are listening, Melanie has kind of spoken to the full gamut of, at least familial experiences from having kids, young kids, to even and employing them in your business, to kids who are maybe graduating, going off to college and university, all the way then to, our elderly parents, right? And if you do find yourself transitioning into a caretaker role. So I love that there's so many different ways to kind of incorporate within your business's tax strategy to really like, yeah, bring back more and retain more value
Yeah.
within. So
Got to
that's
look at
neat.
the whole group as a whole and see what we can
Yeah.
minimize everybody's bracket as a whole.
Yeah. Yeah.
Mm.
So then that brings us, I think, to the O. So what is the O standing for?
The O is offset and defer. And so this is
Okay.
our kick the can plan. And so this is where if you have a business that has, what we do is we look at your profit and loss, and we look at
Mhm.
what company or what services can we move to a different company. And so a lot of what we do is payroll and marketing. And we find a lot of clients have a lot of expenses in that area. So
Yeah.
just for example, if we opened up a new company with a November year end, so this is where we use a
Mhm.
fiscal year end company, and we mark up those services. So let's say we opened up a company with a November year end, we would mark up
Mhm.
those services. That new company would provide services to your main corporation, but the main corporation wouldn't get around to paying the bill until December hits. And so since they have
Mhm.
that different year end, it basically pushes the profits, holds the profits into the one company until the new tax year happens with the other company, and then they shift the profits
Oh,
down to the
correct.
new company. And
Okay.
so
All
it's a
right.
way
A
to
little stagger
basically like
action there. Yeah. Yeah.
exactly. And then we
Wow.
can just keep doing that over and over again each and every year.
Mhm.
And so it's
Yeah.
a deferral strategy. Now, with the previous strategies I talked about, those are all permanent savings. And so there's
Mhm.
permanent savings and deferred savings. A permanent saving is money that you're never going to have to pay back.
Yeah.
Where a deferral savings is money that you're going to, it's almost like an interest free loan.
Eventually.
It's like a loan from the IRS. So that's the way we like to think of it. Like a
Okay.
401k is a good example of that.
Yeah.
And so this strategy is a deferral strategy, but we think of it like a loan from the IRS. So instead of paying your taxes now, you're going to wait to pay it.
Mhm.
You're going to plop that
Mhm.
into investments for your
Okay.
business and then use that to grow down the road.
That's great.
So
Okay.
one client, for example, we were able to get him like a $15 million deferral over the course of several years.
Oh my goodness. Okay.
And yeah, I know it's a big one.
Wow.
And he used that money, that 7.5 million, instead of
Mhm.
paying in taxes, he used that to invest in real estate. And over the course of,
Yeah.
I mean, he started in 2010, so he started really at a good place.
Mhm.
But over the course of since 2010 to now, we've been able to wind that deferral down. And he
Okay.
only owes about 1 million now, but he has over $26 million of real estate assets that he owes to
Yeah.
pay clear with money he would have paid the
Yeah.
IRS.
The history's already written on that one. That's huge. Yeah.
So that one's a really cool one.
Amazing. My goodness.
Yeah.
Okay.
And so that one we always like to say that's not to buy nicer tennis shoes, it's to
Mhm.
really be intentional.
Yeah.
Hmm.
Yeah.
Now the R is reduce capital gains, and so
Okay.
this is where we have several different options. But for example, we had one client that was he was gonna sell his business. Who's I think is about $6 million. It was selling for. He was going to owe a little over 2 million in taxes, and we got that down to 345,000.
Oh, wow. That's
Mm-hmm.
huge. My
Yeah.
goodness. Okay.
And so
Yeah.
there's different triggers you can pull, different tools that we can pull out of our tool belt.
Mhm. Mhm.
The key is just to be really intentional and goes back to that don't have the oh you did conversation.
Yep. Mhm.
Call ahead of time. Let's plan
Yeah.
because the
Make an
sooner you
appointment.
call,
Yeah.
the more options we have.
Yeah. No, that's great.
Another capital gains one, if you have like if your listeners have if you have properties and you have a parent that's nearing the end of their rope,
Mhm.
this is a little dark and gloomy, but
If
one thing you can do is put properties into their name, like gift them
okay.
properties. And you have to be careful with this if you have siblings. Make sure that it's really detailed in the will
Mhm.
and work with an attorney. But
Okay.
when somebody passes away and they have assets like a business or properties, if they pass away, their heirs get what's called a step up in basis.
Hmm.
And so it
Okay.
basically resets the basis. So let's say
Okay. Wow.
you buy
Okay.
a property, it's $200,000. 10 years down the road, it's 1 million. The gain on that
Mhm.
would be 800,000, right?
Mhm.
So let's say before their parents passed away, they gifted that $200,000
Sure.
property to
It's
their
been transferred.
parents.
Okay.
The new basis instead of 200,000 would be 1 million.
Oh,
And so it would
wow.
save capital gains tax on that 800,000.
On that. Yeah. 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 I mean, for we still have one more letter to go, but for for folks who are listening, if your interest has not been piqued yet, in the plethora of ways that Melanie is telling you, you can be saving and keeping more for your business and for your financial goals and honestly your life goals. Um, well, then I don't know what to tell you, but honestly, my interest has been piqued. So I think, if you're listening out there, you likely are going to want to get more info and we will ask Melanie all the different ways we can get in touch with her and One Stop. But we have one more letter to go and I still have a couple more questions. So what is
Awesome.
that last E?
The
What
last
does that
letter's
stand
easy.
for?
It's just engage the savings. So use those savings to
Okay.
invest and reach your
That's
dreams
fun.
quicker. The whole reason why we
So,
all, investors, business owners, we get into business is because
mm,
we want more time, freedom, and fun. And so
absolutely.
we just see this like tax planning as a way to get that faster. So
Yeah.
we
No,
always
that's
encourage our
phenomenal.
clients. Yeah.
Yeah, thank you for sharing those steps. So and I know you said live more that you're rebranding that, but I do want to ask, you do have a show that's going to be coming up soon, and is that the title of the show, the Live More
Yeah,
show?
it's the Live
Okay.
More Show. And the reason why we call it that is our mission statement at One Stop Tax Strategists is to bring peace to taxes and purpose to profits to help you live more. And so,
Well,
like I said, everybody gets into business because they want to live more, they want more time,
mhm,
freedom, and fun. And a lot of the times, like the details of business and taxes and all the boring stuff that bogs them down. And so we kind of see ourselves as a partner that comes alongside our clients to help them
mhm.
to live more and reach their goals quicker.
Yeah, that's beautiful. And it sounds like you're with some of the numbers that you stated. I mean, you guys are clearly having that impact and then some,
Yeah.
And I do have to ask, did you ever dream that you'd be working with your father, with your sister, working with family? And I imagine there's ups and downs with all of that, but what's that like? What's it like in the life, a day in the life?
Yeah. Yeah. I mean, really, like when it comes to family, you just have to be able to be open and be able to be honest with one another and realize we all have different strengths. And so you can't replace though loyalty, you can't replace trust, and you can't replace just being able to go on vacation and write it off with your family. And
Yeah.
so just things like that is a lot of, we have a lot of fun.
Yeah.
There's, I think with any partnership, you're going to have ups and downs, but I'd say overall we have a really good time together.
That's really great. And like I said, I so wish that Byron could have been here today, but
Mhm.
what a treat he is. What a storehouse of knowledge your father is. So,
Yeah.
for One Stop Tax Strategists to have been, really his idea that, he made happen and see to fruition, it's amazing to see just how much value and impact you guys are having for countless thousands of, investors and entrepreneurs out there. I think you had mentioned, Melanie, you had something that you wanted to give away to folks who are listening. So I'll, if you
Yeah.
want to talk about that, that'd be great.
You have a couple things. So,
Mhm.
I have our Live More framework booklet or Live More Pay Less booklet that I've put
Mhm.
together. It's about a 23-page document that kind of goes through all
Okay.
the strategies in more detail and just how to write off your lifestyle. And
Mhm.
so, if people text booklet to 209-924-4606, just text booklet to that, and then I can send that template to you. Also, if they want to see if they're overpaying in taxes, we offer a free tax assessment. And in just 30 minutes or more, on average, we can uncover savings of about $60,000 to $70,000 for if they're netting 250 or more. We have about $60,000 to $70,000 in average savings. And
Okay.
so, and if they're doing great, I tell them, hey, your CPA is doing a
Mhm.
great job. Stick with them.
Yeah.
So it's a good,
Yeah, that's
if
great.
any other area, you mentioned the doctor earlier, any other area in your life,
Mhm.
you get a second opinion. If you're building a house and you work with a contractor, you get second
Second
opinions and
bid and
second
estimate.
quotes, right?
Of
Yep.
course. Yeah.
And if you get a cancer diagnosis or any other diagnosis, then you go to get a second or maybe even a third opinion
Mhm.
and before you do any treatments. And for some reason in the area of taxes, people don't always do that. And so we
Yeah.
just encourage people to just get a second opinion, see how you're doing. And if you're doing great, we're happy to tell you that as well.
Yeah, I think that's phenomenal. And for folks listening, and watching, we will have that phone number that Melanie shared that you can text, booklet to, so you can access, that resource for your own planning. And just to echo what she said, the one thing you will not be remiss of if you do reach out and schedule that consultation and that audit with them is gaining the information and spending the time, because these guys really are they're financial wizards, to say, the least. They're tax wizards, and they really know what they're talking about. Byron has been in this space for 3+ decades, right? And so
over 4 years, yeah,
4+. So, it's really you're doing yourself a disservice if you don't at least reach out just to see, hey, let's just check kind of the health and where we're at of our business when it comes to tax strategy and planning and bookkeeping and whatnot. So thank you so much, Melanie, for being here. It's amazing to hear what you guys have built, that you've done it together as a family for these years, and that you continue to just scale with that. So we'll all be listening and kind of keeping an eye out for the Live More show. I think you guys are going to have some amazing guests on there, and we're excited to see what the future holds.
And if people want to take advantage of that tax assessment, just text SAVE to that same number. So 209-924-4606. If they text SAVE, then we can set up that call.
Perfect. Okay. Sounds good.
Awesome.
Well, you should have a couple of calls coming in. So we appreciate your time, and more to come.
Thanks for having
Thank
me.
you all. Take care.